But to find out a lot more about equipment finance, we are absolutely delighted to have with us Nick Arden from Club Financial Services. Nick, welcome to the show.
Good morning, Simon.
Nick, just on the title first, because I wanted to just, if I could, explore this. Commercial Finance Manager. What is a Commercial Finance Manager?
I've recently been engaged by Club to join the group. The franchisees have historically done an outstanding job in working with residential type loans and facilities for their client bases, and there's an opportunity that's been recognised for Club as a group to create a greater footprint in terms of the commercial finance space. Mm-hmm. So my role is to come on board and assist the franchisees with growing that side of their business.
I think it's a fantastic idea, that, because coming from the broker world, I think it's very difficult, and I think we've explored on the show how many strings to the bow you need to have as a mortgage broker. And I think it's very important because the commercial finance field is different than the residential side of things. So to be an expert in all fields is very difficult. So I think what Club Financial Services, as you've described, has done, is brought in the experts, allow the residential mortgage brokers to do what they do well, and in the event they get someone who's venturing into the world of commercial equipment finance, they've got the expert in the field here in Nick. So I think it makes perfect sense, Nick, doesn't it?
It does, and it's just as easy as identifying an opportunity and then making a call, and we'll have a chat about it and go from there.
Makes sense.
Now, to find out a little bit more about equipment finance, what exactly can be purchased with an equipment finance loan?
Any asset which is a depreciating asset can be funded via an equipment finance loan. Yep. Generally, those assets will be used for business purposes, but motor vehicles could be used for personal purposes. Yeah. So your most frequent or common sort of asset that would be used or financed would be a motor vehicle. Yep. And then you get into other forms of business assets, being trucks and trailers, prime movers, buses, materials handling equipment, medical equipment, agricultural equipment. The farmers, they've always got large capex expenditure. Yep. Then right down the bottom of the list, you've got things like office fit outs, and IT.
Computers, of course.
Yes.
Yeah, very depreciating, aren't they?
So they're generally not as attractive, or will have a shorter term of finance than the other items. But there's any asset that's depreciable, and there's a big list of them.
Quite a range, obviously.
And why is that? You mentioned with the IT that's the bottom of the list, as it will. What would the reasons for that be?
The general reason is that if a financier had a need to repossess the equipment to sell and ultimately pay out the balance of the finance, the IT equipment and your office furniture sort of equipment is going to have a very nominal value. Once it's been installed, it's got a very particular purpose, and the secondary market is very weak in terms of generating funds from those sales.
So not much in the way of security from the lender's perspective.
That's right.
That type of
and you'd also expect to be paying a slightly higher rate for the funding of that sort of equipment.
Yep. So who would benefit? Who would benefit from equipment finance?
Generally, you're going to have your small business owners, might be operating your own business, one or two person. They may need a van or a truck or a ute. Then you've got your larger business owners who might have multiple employees, a number of trade vehicles, and then you're getting into plant and equipment as well. Manufacturers may have a need for lathes and certain other specialised equipment. And you can also, it will also be used by mums and dads, salaried employees who are looking at purchasing their next motor vehicle, and they may not have all the funds available to trade up to their next motor vehicle, and an option is for them to do a consumer equipment finance loan over that car.
It really is, and it's a massive market when you think about it. I know when we first came on, we were talking about equipment finance. Well, how much of a market does this capture? But when you talk about it like that, Nick, it's a massive market, isn't it? You know, so many small business enterprises in Australia. It will be a huge market.
It is a big market. Generally, the size of the piece of equipment, most financiers prefer to sort of step in around $20,000. Yep. There are some who'll do smaller items, but generally anything that's $20,000 and above, and it's a depreciating asset, can be funded.
There's a market for it.
Yeah, wonderful. Now, what does it mean exactly to lease something?
Leasing is really just a terminology. It's a form of finance. So it's really just taking an asset, and that asset has a useful life. Let's take a trailer that's going to go on the back of a prime mover. That may have a 15-year lifespan. Now, instead of paying for that out of your pocket from your cash account on day one, leasing enables you to structure a facility over, say, a 5-year term and create payments on a monthly basis over that period in line with the cash flow that trailer will generate towards your business.
Right.
So why would somebody lease? Because there are other options out there, I believe. Why would someone lease? What's the benefits?
Well, the benefits are that they can generally match their cash flow with their expense of paying for the item with the income that they're generating through that item.
And just if I could explore, you mentioned there the useful life of a product.
Yes.
Who determines what the useful life of the product is?
The taxation office has a say in it.
Okay. As you would expect.
In terms of depreciation and how you can claim your depreciation against the asset.
Okay.
And what level. But financiers will generally say, take a more conservative position as well and say that a motor vehicle, for example, might have a life of, say, 8 years. Well, initially a term that you might look to finance a motor vehicle over might be a 4-year period, so 48 months, and then at the end of that 48 months there's what's called a balloon or a residual payment,
Right.
which matches what the anticipated value of that car will be at the end of the 4 years, so that if it was to be sold at that time, it nets sufficient funds to pay out the residual.
So essentially, they wouldn't take a lease out the whole realistic working life. They'd come back a little bit and say, well, there's probably going to be at least a value there we can get something back out of.
Absolutely, because the financiers also want to make sure that they get their money out and there's still some value left in the asset, rather than over the full term.
Yep.
Now, we mentioned tax. I guess, are there any tax benefits to leasing?
There are some tax benefits. Being a form of finance, there's an interest component to the facility, and generally that interest component is deductible against your business income. For a full understanding of your tax implications or benefits, I'd recommend that customers speak with their accountants and get
the full story.
Get the full story, yes.